Ladies and gentlemen of the crypto space, we're live on a Wednesday, February 12th at 11:35 a.m. Okay, what are we going to talk about today? We'll slip over to the comments tab. You guys know what to do on X and on YouTube. Fill that comment section and let's see what's on your mind. My 2 cents, given CPI print today, there's so much of everything that people are exposed to is noise. What's the Fed funds rate? Everyone thinks the Fed this, Fed that. So much more to the system. And it really reduces to two key interest rates, Fed funds rate, which is bank lending, and the benchmark interest rate, which is basically 10-year yields. So the Fed has expressed overwhelmingly that they're in control of the Fed funds rate and they will respond accordingly. I don't expect rate cuts, and the market's expecting them to maybe cut rates in September at this point. So how do I see that? It's noise. It's all noise. And that is exactly why I don't look at the Fed funds rate. I don't like have a chart of it. It's not like it moves on a daily average on a daily time frame. I don't look at the futures for it. That's just a speculation market based on, FOMC subjective decision making. I just don't give a shit. I prefer to look at the dollar, the move, and the 10-year. So the 10-year obviously is the benchmark interest rate. That's where if you're gonna borrow at X amount of percent interest, let's say at 3%, and you're an institution creditor, borrow 3%, and you lend at 3.5, 4%. Take a 0.5% or 1% spread. That's basically the way credit works. It's the way mortgages work. Business credit, lines of credit, so on and so forth. It's very easy to understand. There are two interest rates, and I don't give a shit about the Fed funds rate. I care about the damn 10-year yield. 10-year yield popped today in response to the CPI announcement. Clearly, as they said, shelter inflation's running hot. Other inflation is relatively low. Let's go to trueflation and see what is actually the case. If it loads. Um, so aggregate since 2020, about 25, 26%. Index? Yeah, Trueflation US index. 2%. So isn't that the Fed target? So it's all noise. That's what this basically means. It means they're a board of people that make decisions and they have their own interest rate, inflation rate calculation, and they have their 1,000 PhD economists doing whatever the fuck they do, aside from sucking up capital right out of our tax dollars. So that's their narrative. They spin the narrative because if they say if they look, that's all jawboning. Jerome gets up on the podium and he says, dovish, mm, bearish, or hawkish. And the market responds literally to his fucking words. That's so stupid. That means it's stupid. It means the whole concept of looking at the Fed's funds rate is stupid. Because if the Fed funds rate remains where it is, and we don't get a cut till September, and we have a freaking face ripping rally between now and September, you probably should start looking at other information to assess what the hell is going on in the market and where things are heading. That is a very simple way to say start looking at other shit, particularly 10-year yields. And this comes back to everything I talk about regarding collapse of volatility of long-term interest rates and what it leads to. You see the 10-year yield fall to 4.25 and move collapse to 70, and the Fed funds rate doesn't freaking budge. You get the face ripping rally. DXY rolls over to 106, 105. Things are going to melt. And then maybe get some administration policy. get interest rates down further. I mean, that's the whole simplification of what people think is a complicated equation. If something's not working in your inspection, change what you're looking at. Dollar at 108.15. It's horizontal. I'm looking at a monthly candle here, so it shows you the time frame that I look at. I have a very high time frame preference. Very. I said I don't give a shit about the time frame. It could be whatever, and that affords me this very expanded view of how to get a sense of where we are and where we're heading and over what time frame that is. My speculation is that the last 3 months is a rejection of the 107.35 line, and this is a transitory false breakout. And there will have to be follow up, not necessarily from a regulatory standpoint, a monetary policy standpoint, but from a fiscal and uh, uh, administrative administration policy standpoint. You know who says it? Fed guy. This guy gets it. Joseph. What did he say? In November of 2018, the Trump admin could still ease financial conditions even without the Fed regulatory changes, could lower the 10-year by 50 basis points by widening the swap window, the swap spread. Granting REITs access to FHLBs could narrow the mortgage spread. It's not just about short rates. In fact, yes, but it's both. But the point is, if if a board, FOMC board, is responsible for Fed funds rate and we don't expect them to move, there's other mechanics and other mechanisms that cause control and impact the behavior of markets. Literally what he's saying. And today he follows up with, it's coming. Swap spreads already 10 basis points wider in a few weeks. So that's something to watch, the swap spreads, as he indicates. Maybe that's another ticker to add to the list of shit to look at. This would be a forward-looking indicator. Forward-looking indicator on 10-year yields. And 10-year yields are a forward-looking indicator on the move index. And you can see the DXY respond maybe in parallel to 10-year yields. I don't think maybe the move obviously um, is a forward-looking indicator on this currency spreads. Move rolls over. It takes time for the system to spin up the euro dollar printer. So that is a decent statement, albeit clearly the DXY and cross currency spreads with the dollar are real time. So, but it's nice to know if we still see the real timer, like, all right, DXY is coming down. Where's it going to be in 6 months? Is it going to be significantly lower? And if moves collapse into 60 and 70, and that's put it in lower lows, then yeah, there's a confluence there suggesting that the DXY is going to go lower. And then you get your rallies in risk markets because cash frees up. Cash being basically any currency denomination around the world, free liquid capital available to acquire assets, to make purchases. And that is no more pronounced than when foreign currency appreciates. You understand why, right? Foreign currencies have their own respective printing presses, their own respective euro dollar markets, and there's much, much more foreign currency than dollars. Therefore, when they go up in value, that is reasonable way to describe liquidity conditions. Relative dollar value. More currency other than the dollar, its value is going up. There's significantly more purchasing power globally. It's simple as that. This is why we haven't had a bull market since 2021. The dollar's strength has prevented that because all other currencies are a relative game. So obviously, we've significantly increased dollar supply, but other countries have increased their supply. But Until that skews favorably towards foreign currencies, you don't get the relative results you want to see, which is foreign currency appreciation. For instance, if less foreign currency is printed compared to dollars, then it's going to be relatively stronger. I love these four circles. I don't change charts much, and this is such a great inspection of where we were. So important to understand 2016 and 2017 and 2020 and 2021. You go to the weekly, you see the guppies, red guppies on the weekly. So we're not there yet, which is irrelevant into the decision making process. It means, all right, not there yet. We will be there when and under what conditions. So we look to information. What kind of forward looking pieces of information can we say, oh, and frankly, since 22, so for the last two and change years, we this is a topping pattern. So you could do something like this and be like, oh, just note this is on the weekly chart, so I prefer the monthly, but this is a topping pattern. Come on. Sharp reversals in 17, sharp reversals in 20. So maybe there's a bit of congestion up here in the dot-com bust, but this is, if anything, actually, this is a nice circle to add. Let's zoom out to the monthly so we see the big circles. I mean, can you even put a circle around this freaking monster in the 80s? Jesus. Clearly a topping pattern. He went straight up like a Christmas tree and straight down. It was like a freaking meme coin. What's notable is the congestion. There was literally no congestion because this was artificial intervention, the Plaza Accords. This was, monetary and fiscal intervention. This was, pre 2008 style intervention, but it was clearly intervention. So there was a structured topping pattern. And now we have this much more elaborate topping pattern. I'm literally just looking at years here, 22 to current. Breakout, rejected. Attempted breakout, rejected. Another attempted breakout, rejected. Breakout, significantly weaker than the breakout in 22. There's a confluence suggesting rejection. Just for the continuity of the rules-based order, the kind of the continuation of economics as we understand it and know it, or the preservation, the continued existence of normalcy, because this breaks out and everything falls apart. So this is the policy, a coherent policy, a shared policy at the geopolitical level. Everyone agrees dollar needs to come down, otherwise other currencies are weaker. Their currencies are their uh, financial economies aren't strong, and if you weaken the dollar, their currencies go in strength, and you have an economic cycle. You have your expansion phase of the economic cycle. Right now, we're in the everyone's trying to figure out what the fuck's going on part of the cycle because we're done going up. We were going up in 21 to October 22. Do we continue to go up or do we reverse? Well, at this point, there's a fair amount of confidence suggesting reversal to the downside. And that would be expansion. When the dollar comes down, system expands. When the dollar goes up, system contracts or just treads horizontally like a freaking crab. Thus, the Bitcoin chart for what? How many months? Just literally horizontal crab walk. Even at the 90s, look at this. Last 4 months have been crab. Then you had crab here, all crab throughout 24. But given the change in psychological tone of this commodity instrument globally, what do we have? We have basically this. So it's obviously logarithmic, but 69 was the previous top, and the ceiling here was 73. All right, all right. So the point is, this is basically like a breakout. So you had a previous high, interaction with the previous high, a breakout from the previous high, and now what you would want to see from a confluence perspective is a retest of the 70s. But You might not have that because of the overall tone change of economics globally and geopolitics for that matter. Everything's changing. Everything's always changing. So you might not have that retest in the same way. Maybe you just have horizontal crawl for the next couple months, and then you get the breakout. So, you know, retest is an interesting confluence because that is such a strong component of inspection. When you see a retest and it holds up here at 73, you're like, oh my God, that looks so good. That's a resistance flip support type situation. But if it breaks out from here, up to 150 or whatever, that's still this is a breakout confirmation without the retest. Maybe that's akin to like equities markets like gap fills and shit. You never had the retest, so you end up getting the retest. Maybe there's your retest. Economic catastrophe 26, 27. 200K crashes to 73K, and you're like, oh, there's your retest. And that's also incredible because that'd be a resistance flip support. Am I the only lunatic that says it goes to 200 and then it crashes to 73 and that's incredible? That would be such a good looking goddamn chart. Wow. That'd be breathtaking to see. Crashes to 73 and stays at 73, crabs walks for 6 months and then pushes a little higher up to 95. Oh, God. That would be crazy to see. But obviously, this entire chart is a manifestation of basically the dollar and benchmark interest rate. Benchmark interest rate is what governs the capacity for the system to expand dollar supply. So technically, you could just look at the dollar. Be like, all right, if the dollar is going down, that's because the benchmark interest rate has finally stabilized, has started to decrease marginally, which is a marginal increase in the price of collateral, long-term U.S. debt, which means the volatility is coming down, and everyone's like, all right, it's time, game on. So you get your dollar supply because instead of buying dollars, people are able to print dollars. That's the way that mechanic works. It'll be interesting to see that Ethereum mega ultra short position completely unwind and collapse, cascading liquidation at some point, which basically screams this is a fake out breakout pattern. In a month, we go from 0.0275 to zero point zero 0.07, 250% rally in a month. That'd be disgusting. That'd be just gross. But then that's literally fake out breakout. Fake out breakout is a very classic chart pattern. Gold's at 2,900 freaking dollars. Oh my God. You know, you'll never see this on social media. You'll never see just a person excited about today's charts. The charts are insane. This chart is crazy. And this is a component. This is something that folks this is all brokerage accounts should have gold, but you call the commodities desk, the metals desk. Got to have gold, and they throw it in the vault and whatnot, 401k, whatever, IRAs, rollovers, whatever. Um, it's just an important component. So it has that factor in. It's just position size, okay. It's just a component of what you own. Food for thought. Gold's important. The piece of the economy, meaningful because it has been a meaningful and it will continue to be meaningful, especially considering prevailing narratives where gold's used to, you know, they reprice gold. I think gold certificates. Do you know what they're priced at? What are gold uh pricing? Gold certificates. Oh shit, what was the yeah, check this out. Gold's $20.67. Yeah, I think that's it. It's something like that. It's like 20, 30, $40. But I think that's it. It's in law. It's So all the gold had this was I don't remember the whole history, but generally I'm trying to say that currently under U.S. law, the gold certificates are priced at like 20 something dollars per ounce, and the current spot rate's $2,900. And if they want to reprice gold, when you reprice the gold at the Treasury, you get a corresponding deposit to the Treasury general account. I believe that's the mechanic. Um, so they, if you want to like pay off the debt and whatnot, uh, you have to reprice gold to like 30,000 or something. I don't know. Let's just say a big number, 16 to 30,000. Just vague, fog recollection of talking points I've heard. But that is a massive potential, and having maximum high time preference. That's why it's important to have like gold coins and stuff. Just is. Anyway, I digress. Nobody wants to hear about freaking gold on a crypto talk show. Percent, 2%. Anything else interesting? Yes. Anyway, I've been talking to Le Krug. Yes, and that's exactly the case. But the administration, so that's the whole point. So he was talking about, so Trump mentioned interest rates should be lower. Um, and he was being critical of Trump, and I was saying he doesn't mean the Fed funds rate. That's exactly what I'm telling you guys about short-term interest rates versus market set rate at the long end. Uh, they don't have control over the long end. That's market driven, but they have a capacity to influence it vis-a-vis open market activity, which is exactly what Joseph Lang was just talking about. So they could influence the long-term benchmark interest rate. Now the Fed has done that via QE and QT, but as the swap spread widen, as Joseph was talking about, that could bring down benchmark interest rate, 50 basis points and whatnot. And there's plenty of other things as well. I'm sure there's very interesting things that can be done from a policy standpoint in order to manipulate and influence the economy. And that is obviously not even considering geopolitical collusion. It's the coordination between nation states to manipulate, affect, adjust the course of financial activity. So that's pretty much. We're not getting hot at print inflation. There's no. I agree. They're not cutting. Those boys at the Fed and Powell is actually quite impressive in my opinion. That boy takes it seriously. They shouldn't cut, and inflation's going a little hot, and everything they say is quite reasonable in many regards. The problem is everyone latches onto his words like, "No, dude, you got to cut." No, no, let them do what they do. There's other mechanics in play. It's a much more sophisticated system than social media presents it to be. Why would the Fed throwing kids? They would not. Yeah, but he's not talking. He's. There's been a couple of statements where he's like Jerome should lower the interest rate. He's not going to. But then Trump's going to be like, okay, exactly what Joseph Lang said. Okay, how do we get the benchmark interest rate down? Other policy tools. Shadow was on a tear this morning. Absolutely wild. See it up at $9, 12.64% on the day. Wild, wild ride Shadow has been on good old Sonic. Good news Sonic, not really old at all. So that's cool. A little bit of history is probably bleeding over from other tickers and whatnot. There's your charts basically up and to the right. That was a nice free position afforded by Ramsey's on Arbitrum, exposure thereof. It's nothing better than getting something for free that pays you on a weekly basis. That's just crazy. Really just is. What else? What else was I going to talk about today? Um, was it just Shadow? No, I guess Shadow is good to talk about. I mean, everything else still stands. This was interesting today. Tango is going to be a heck of a week. I mean, when that 7, 8 o'clock on tonight, when that uh, epoch rolls over, next week's print's going to be quite telling and interesting, to say the least. I very much look forward to tonight and seeing the numbers that come out. So contango continues to be just insanely misappreciated and mispriced. Is what it is. Markets will be more irrational longer than most people can tolerate. Fortunately, I am the antithesis of most people. I have it's not that I have more tolerance. At this point, my psychology is not even a component. It's there is no effect. It's not indifference because that implies I don't recognize and understand the mechanics of the system. It's not numb. It's meaningless. Volatility along the path is meaningless. I care not. It's kind of like I know where the destination is, and I don't give a crap how long it takes. It's just that's where it's heading. So the path is irrelevant. So what's pertinent is the rules. And always come back to the number one rule: own more assets. And then there's another rule that me and Aaron have been talking about lately. When do you stop? So that is something for you to define. When do you own enough assets cyclically? Because you can't just keep buying assets because then you have no money and you're broke. So you need to stop at some point. So where's that fine line? Where's that line? What's that threshold in which, all right, you've cyclically stopped accumulating assets? Because this game is not about making the most money as possible. The game is about a sustainable methodology and an execution thereof. So follow your rules. Own more assets. Okay. Cyclically, when do I stop owning assets? Okay. Conditions met. Execute with prejudice. Execute. So that is very important because you have to define your rules and obey your rules. That leads to success. When you break your rules, you introduce unknowns. Uh, and then you come back to like, how do you measure your success? And I very clearly tell everyone my measurement of success is my capacity to execute and adhere to my rules. I'm executing and doing what I said I was going to do. I succeeded. Has nothing to do with pricing and total net worth. That's not up to me. That's like what Krugman was talking about. Step out of the market. I have no control over that. You can only be responsible for what you are in control of. And you alone are in control of your decisions, your choices. So if you have rigorously defined rules, you have a capacity to be in 100% control. Just execute your rules. Hope that helps, ladies and gentlemen. Gold, revenue from bud market should be decent. Curve up at 53, looks lovely. Go on the weekly chart. Is it the daily chart? Where's the giant twap? All right, 200 SMA mean regression on the daily. Oh, it's the monthly chart that has the twap. And the twap isn't drawing. Great. Or is it the weekly? Where's the twap? Why is the twap not drawing? Oh, error. That's great. My twap. I want my twap back. It won't give me my twap. So what is it on the twap on the monthly? I think that's what it was. On the 200 mean regression on the daily. It's just this. It's just a lovely chart. That's just lovely. That's a mean regression because look how many days of interaction with the 200 SMA. It's pretty good. That's nice to see. Very comforting. Very comforting. Ooh, look at the DXY down below 108. Finally, son of a bitch. This thing is it's been painful to watch this thing ride above the 107.35 line. But look at that, back below 107. I'd love to see this, 107. Breach that damn line. Breach that line, baby. Come on. Come on. Everyone's been talking about ISM uptick 50.9. First time we're above 50.50. And the 50 mark is kind of denoted as contracting or expanding. First time since September 22. So, let's put it back here, June of 20. What was going on in June of 20 on the upswing of the ISM? That's where we are right now. We're breaking the guppies of the downtrend, which is basically like right here, starting to break it, June of 20. Okay. Just saying, ladies and gentlemen, that's a very interesting month of a very complicated year, but we sure as hell know what was going on in these financial markets. Food for thought in that regard for folks that say it's top end, top end. With ISM about to breach 50 to the upside, push the guppies. Yeah, that is us thinking about June of 2020. That was a DeFi summer for folks that don't know. China? Oh, Christ. What an abs. It's still the same. Nothing has changed with the story of China. It is an absolute economic collapse. The only way to understand this, other than what I say, absolute economic collapse is like geopolitical conversation of like a Peter Zeihan. But just focus on his geopolitics and not too much his economic commentary. His geopolitics are just wild to hear. Um, insane that he's always in a different place. Crazy. He's always podcasting from some insane location, which is pretty cool. Bitcoin dominant 6127. That is the most disgusting wick in a long time. Notice this is daily chart, so it'll drive you nuts. Let's see if we get the weekly to load. Reset, zoom. And generally speaking, this is from the monthly, so it's 1, 2, 3, 4, 5. So we're 5 months above the 100 SMA. My general sentiment is this doesn't break out. This gets rejected, and we have a continued downtrend. There's just too many not Bitcoin, altcoin. So it's makes sense that you're going to have further monetization of not Bitcoin. So Bitcoin continues to get monetized, but there's just so much more financial opportunity outside of the Bitcoin realm. And is Bitcoin really financial opportunity because it's not really not a business. So it's not fintech. It's a collateral instrument, an asset commodity with degrees of moneyness. So it has a very different conversation to it. So my general expectation is further monetization of not Bitcoin from a business inspection standpoint. And this fails the breakout, gets rejected to the downside. Is this a lagging indicator? If, you want to see the DXY roll over, and then you're like, all right, there we go, alt season, as people call it, and which is basically monetization of crypto fintech season. If you want to actually understand what the hell's going on in these crypto markets, oil hovering 71.6. We'll see what happens with inflation. Now, I've always thought historically that if the benchmark rate rolls over, move collapses, dollar rolls over, you don't get the same consumer price inflation that you do when like credit card rates collapse, where the Fed cuts rates significantly, or the Fed engages in um, open market operations to adjust the benchmark rate QBQT. Um, So I've historically thought that capital, that expansion of capital, gets concentrated to the financial economy. I bifurcated my inspection of the system as the real economy and the financial economy. Real economy is employment, W-2, paychecks, manufacturing, so on and so forth. But the financial economy is Wall Street and markets, assets, buying and selling of assets, and the monetization of those assets. So you get the benchmark interest rate rollover, which is basically we've seen the behavior when that happens. That's what QE does. So if administration policy achieves the same thing, you're going to get an expansion of the financial economy, which is kind of what all governments around the world need in order to nominally service their debt obligations. So anyway, that's not really related to oil. Anything else that's interesting here? All right, let's go to commentary. Russell 2000 taking a 1% shit today. This thing literally hasn't broken out past 21. It just hasn't. It's done nothing. It's gone nowhere in almost in, 4 years. 22. It's going on four over 3 years. So and then they talk about like more stocks, a broader inspection of the market, what the Wilshire 5,000, something like that. And then you go into like this shit, which clearly broke out, S&P 500, and Nasdaq, which clearly broke out. And these are just ETFs that are curated with position sizes that skew towards what is outperforming, which makes sense from an ETF standpoint. But when people look at it to inspect the state of a market, it's given a false impression of the state of the market because it's concentrated and curated. It's a snapshot of only a component of the market. Anywho, if you are on X or on YouTube, feel welcome to ask any questions. I am more than happy to talk about anything today. Joel Reynolds in the house. Good morning. Anasat, hi. Arrow, howdy, my friend. Dean, afternoon. Yo, Maxie, good morning. Hope you filled your fridge with eggs. Yeah, there's plenty of eggs. Different markets. Um, yeah, well, but the standard market, standard supermarket, it's shelves have been empty. But from wholesale, like in my neighborhood, Amazon delivers. Uh, but you go like one town over, and Amazon doesn't deliver. So it's very isolated markets. But what or the smaller markets. Oh my God, it's slipping my mind. What's the name of it? Not Whole Foods. That's clearly not a smaller brand. Can't believe I forgot the name of the supermarket. Anyway, that supermarket has eggs. There's eggs. I mean, okay, I'm not picky. I'm cool with eggs. I'm also cool with just buying a bag of whey protein on Amazon. You adapt, you accommodate, you survive. Uh, it's got some supplements. Maybe they're by the front door. Um, Important to take care of your health and don't be rigid. Change, adapt. So many alternatives. My favorite thing right now, talking about health. My favorite thing right now, because this is the only thing I'll talk about, are these wraps, big wraps. And what I do is I take ham, I take jalapenos and banana peppers and Russian dressing, whatever. Maybe a little bit of cheese. Like basically, the wraps have like 24 grams of carbs and 20 grams of dietary fiber. Okay, when I read the back of this label and saw 20 grams of dietary fiber in a single wrap, do you have any idea how much that is? That is a monumental amount of dietary fiber. If you have 2 wraps per day, that nails all your dietary fiber requirements from like an RDA standpoint. But then you do like make another wrap. If you get like 60 grams of dietary fiber a day, it literally changes everything. It's just insane what dietary fiber does. And there's one other thing that I could mention: health shit. Everyone talks about probiotics. Now, probiotics are important. But prebiotics are really the kick that I'm on right now. And what is a prebiotic? So it's important to have good bacteria, but folks can't really overdo it. But the point is, you get it's like a $50 bottle, and if you take it once a week and it lasts like a couple months and you keep it refrigerated, that's all you need probiotics because your body's going to manage that. But what you need is prebiotics, much more important. Prebiotics, I look at the ingredients and it's bromelain, papain, and pancreatin, amylase, lipase, protease, and that stuff. Standard prebiotic blend. If you see, look up a video of what prebiotics, or I've seen very interesting videos of the breakdown of protein. So prebiotics break everything down, and then you're like probiotics digest it and stuff like that. But you have nothing for the good bacteria unless you have a capacity to break shit down. So the prebiotics are much more important, in my opinion, at least in my experience. I used to go heavy on the probiotics, but now I'm just like, all right, I eat something, prebiotic. eat something, prebiotic, and it's wild the effect that it has. Um, blood glucose stabilization. Uh, if you have any symptoms of metabolic syndrome where you have lethargy, you're tired, or you feel bloated in your stomach, just prebiotics, prebiotics, and he could dose it nicely. Just take one or two after you eat something, and just it shreds it to nothing. That's the whole point. Literally, it's supplementing the stuff in your body that shreds the stuff in your stomach. Anywho, digression. Those are the only two things, I promise. Can you please analyze Solana activity with stablecoins compared to mainnet and Curve? Yeah, let's take a look. Solana is disgusting with regard to how many stables it has. Structure of the markets have changed. Sub 3 should be juicy. Jesus Christ, 12.668. Monumental structural shift in what's going on. This may be institutional offerings, and it signifies follow the money, meaning there's something significant going on because this is a large amount of capital flow. Begs the question, what's investable? Nothing significant or nobody significant gives a shit about meme coins at all. Period. It's irrelevant. So what's pertinent is what are the credit facilities, what are the foreign exchanges, and of those, what are actually investable? And to inspect that, you have to understand vested interest, who owns what is the monetary policy, what kind of dilution could be expected, what kind of cash flow could be expected. Because that's a big thing. When Bitcoin ETF launched, there was a lot of folks that didn't want exposure to it because it didn't really fit into a lot of portfolios, compounding cash flow portfolios, which is what a lot of financial managers want to see. But that's exactly what these types of inspections are. What are the businesses? Where's the cash flow? How can you compound exposure to something that's growing? What happens when there's 100 bill on Solana? Oh my God. So very interesting. Looking forward to Solve 3 in that regard. Mainnet and Curve. Let's look at Mainnet. Not really related to Curve, but Mainnet's up and to the right. There's nothing like Mainnet. I can't believe we're at 121. You get a 1.78% change on Mainnet, it's $2 billion. You get a 5.87% change on Solana at 700 mil. Mainnet is a monster compared to everything else. It makes Solana seem microscopic and insignificant and irrelevant. That's the perspective to have. That's literally a quantitative assessment based on the most important inspection of any chain, of any economy. How much money is there? And note that I always remind folks I don't give a shit about TVL. That means nothing. All that matters is the amount of dollars that are in a particular market, not the monetization of assets resulting from those dollars. Therefore, everything is a derivative. The value of all TVL is a derivative of the quantity of dollars in a particular market. So mainnet dwarfs everything overwhelmingly. Curious about compared efficiency with depth and swaps. You're going to get much more efficient financial activity on mainnet. There's significantly more capital. There's 10 times more capital. There's 90% less capital on Solana as compared to Ethereum mainnet. That is a monumental difference. It's like looking at what um, Brazil versus something small, El Salvador, Honduras, Canada, U.S. versus Britain. So, massive versus not as massive. It's a completely different realm of financial activity on mainnet compared to anywhere else. That's it. Hope that helps, dude. Present Cab, much pleasure. Joshua, I lag on those interface and swap mechanics. What are your thoughts on speculating on token? I don't speculate on token prices. Ondo is meaningful to the systemic health of these financial economies. They bring collateral on chain, they bring liabilities on chain. So I don't need nor want exposure to it. Now it's popular because it's the whole RWA narrative. potential for price appreciation. Everything has the potential. You get the dollar that rolls over to 106, 105. Everything goes apeshit vertical. Everything. So that's why I'm not fond of looking at price of tokens, because it'll all go vertical. But we'll go vertical if you get a dollar collapse like that. Everything goes vertical. And then you're like, oh, which one's going more vertical? That's just not sustainable methodology. So um, I don't speculate on token. I don't speculate on price. What's the cash flow like? How much interest is it paying? And hasn't compared to other businesses that provide a similar interest. If Ondo's paying 20% and something else is paying 20%, it doesn't mean there's no difference. 20% is 20% is 20%. So that's my 2 cents the way that I look at markets. Ondo has done well, to say the least. There's many talks about QTQE. Is that noise complete noise? Complete noise. Complete noise. I just needed to put the right emphasis on the correct syllable. President Sir Joe, Crypto Well, hello. The advisor in the house, good morning. John Steps, good morning, Cap. Any thoughts on Barodrome on Barachain First Epoch tonight? I'm more interested in Linnea. Um, Sui has a V33. Fay's got V33. It could be V33s everywhere. I don't have any data on Barodrome. It's potentially more hot than like Cosmos type stuff. It could do some interesting things compared to Sui Say type stuff. New, I don't like new unless it's free. So it's not free in this instance. So I'm not interested. And in hindsight, more recent hindsight than longer hindsight. Longer hindsight, I've been known to ape a little bit, but in more recent hindsight, it's like I don't like new, and that has either hurt me or helped me. And I would argue it's helped me more so than anything because just so methodical nowadays. I don't have time or patience for like just spending capital. You work your ass off to accumulate some cash, and it's like you just drop the cash on and more purchases. It's kind of an addiction, ladies and gentlemen. You get stack up $5,000 from cash flow, and you're like, what do I buy? No, you just stack 5 grand. You don't need to buy anything. You got 5 freaking grand. And one day maybe it's we stacked up 50 grand. And you're like, I don't need to buy anything. I got 50 chip. So the whole point of that is what are your defined rules? And I much more enjoy the ideas that Buffett has taught us. Let this thing frickin' run to Valhalla, stack the fat bag of cash, pay for everything, and then it all collapses. And while everyone's panicking, yeah, cool, I'll buy this, I'll buy that. And you acquire new things at a relative discount. And then it keeps going down, it keeps going down. You're like, fuck, maybe I should have waited. And then you're like, oh, okay, next time I'll wait more. And wait till when? All right, maybe wait till the dollar finds a freaking top or wait till you have your first run. I mean, look, folks were excited about altcoins since 22 when Bitcoin started repricing from 16K and not Bitcoin. Altcoins didn't really have it their repricing until what October, November of 24. Let's see if we can see something for October, November 24 from a dollar perspective. So here's the Bitcoin repricing. October 22, Bitcoin started repricing. July, well, the dollar is actually bullish while all coins were getting bullish. So maybe, the section here is not too valuable. So the dollar was rallying in October, November, December of 24. That's when you had your major altcoin repricing. I'm not talking about Solana meme coins. I'm not talking about Cosmos airdrops beginning of 24, which was just fire. And here's your two legs. This was Cosmos season. This was Solana season. These white lines. Altcoin. So that's actually interesting. Altcoin repricing is on this bullish uptrend in the relative dollar value. So maybe the market is forward looking that this is a weak uptrend, and it's a third interaction with the 10735 line, and people are front running the dollar cascade, front running, everything code type thesis has to roll. They got to roll almost 10 trillion of debt. Dollar has to come down, otherwise you don't have partners and allies and capacity to import goods and services. Just collapse foreign nations. Dollar goes up from here, and everything's game over. So maybe the altcoin repricing amongst the dollar bullish backdrop was forward looking that yeah, this is your opportunity to get the discount. So that's a decent statement. This was buy the dip for altcoins, crypto businesses, not altcoins, the actual fintech. You had you were at 50 cents on curve. I was at 20 cents. So 250% repricing to the upside, which is a mean regression. Very interesting to think that it took 2 years for buy the dip in crypto fintech, and you needed two bullish cycles and meme coins and Cosmos airdrops. This is as forward-looking indicators of a final buy the dip here in Q4 24. That's my 2 cents. So when do you stacking bags through the bull market and everything collapses? When's bottom? You'll never get bottom. Maybe you thought bottom was in July of 23. That would have been pretty. That's I honestly I've been buying since 23, 24, and the last bag I think was Liquidity. Before that was Contango. So I've had done my purchases between 23, 24, end of 24, nothing in 25. So you don't buy the bottom. As long as you're getting cash flow, that's all that matters. And protect your cash. Just like a position. You don't want to draw down your free cash. You can't empty your bank account. So you have to manage it prudently, as a fiduciary would, with responsibility and respect. Assumes in the house, much a pleasure. Hope everything's well with you. That's about it. Unless anyone on X or YouTube has any further questions, I think we could wrap it up for today. Marginal drop at M0, nothing really interesting. It's a bit of a triangular compression if that's a takeaway from an M0 chart. Um, M2, whatever. More interested in a dollar, albeit some folks look to M2 ticking up, which is whatever. This is basically dollar derivatives at the US level. US dollar derivatives, dollar liabilities, collection of varying dollar liabilities at the US level. Total three, that's a good inspection. Um, get rid of that. Someone had a good inspection on X the other day. There's something like total drawdown. In any regard, who the hell a wick to see at this stage of the market. $898 billion is basically an interaction with previous highs. This is just further confirmation that there's been no breakout. There's been no bull market, period. Period. There's been no breakout. So there's a lot of tolerance. You have to have a lot of tolerance in numbers to understand my perspective. 900 billion is clearly a big difference between 1.122 trillion. No, the way I see this chart is we're at all-time highs. It's just literally 10%, but still, it's basically you're sitting right at the all-time highs. You interacted with it once, twice, and now this is the third month with a wick like this, right at all-time highs. You could blink through the all-time highs in a day or two if you have the most favorable of conditions. So That probably is a good statement that reinforces or re-expresses how I look at markets. We're sitting at an all-time high, and it hasn't broken out. That is just the only inspection I could possibly have. Let's wrap it up for today, ladies and gentlemen. I appreciate all of you. Wednesday, February 12th at 12:30 p.m. 191 people made it to the end of the stream and are all now a little bit more rational because of it. Keep your head on a swivel, watch the dollar, watch the 10-year yield, see if they're able to adjust the benchmark interest rate. Follow a Fed guy, Joseph Wang, smart guy, has his ear to the pavement, gives a signal through noise. And, let time pass. Time does all the work. That's the most important thing. Until next time, ladies and gentlemen,